Today is 6th April 2024 and we are looking at reviewing the Nifty market. So let's start looking at what has happened in the last 1 week. We're looking at the daily charts. As you can see, we had a wide range day and then we have an inside day for closing yesterday. So it's kind of very strange market, seems to be forming like a diamond shape. But yeah, the moment we start getting into shapes, things get complicated. But the key element to take note here is going to be in terms of what we see here. You can see that it is trying to it's stuck at that particular resistance, and the markets are currently in an up channel. So they will retrace and then they'll continue the uptrend if that's the case. As of now, it's broken it's kind of still holding the uptrend here. As you can see, we are looking at this particular measure. So the uptrend is still being held up. If it breaks down below this particular level 22,400, then we might see downtrend. I won't really call it a downtrend yet. It might just be a retracement. So the downtrend is not yet confirmed. Let's look at some of the statistics. As we can see, it's been continuously in an uptrend mode and it's been going strong. Now in the last 3 days, it has gone up to the top of the Bollinger Band and it's trying to retrace. So we could probably look at it going towards lower levels of 22,000. In terms of the market consensus for this particular week, we have a lot of resistance being created around 23,000 levels. And in terms of support, we are looking at support at the current level 22,500, 22,400 and 21,500. In terms of the price action, the left side price action that you see here in the green bar, that is the one that is the composite of the last 3 days. And here we have the price action from earlier. The thing to note here is, as you can see, there is major support that has been created at 22,580, and it seems to be in this particular range of 22,600 and 22,500. So those are the levels that we'll have to look out for. Let me just mark those on the chart. So we're looking at 22,600. So this section here and 22,500. So that's the block that we're looking for. Okay, next for tomorrow we are looking at a very small range. Mostly I will think it's going to be a breakout. So 22,500, if it breaks out into this particular block, we might see some move up all the way up to 22,600. That's what we are looking for. If not, the breakdown, we have a pretty decent flow going down all the way to 20,300. So that's the inside day that has been formed, and those are the levels to watch out for. terms of the Fibonacci, let's look at the last 10 days because we're looking at short-term analysis of 1 week. So based upon the latest high, we had a high formed on 4th April. In terms of the retracements 23.6% retracement is at 22,445, which was, so yesterday it came down up to 20,425. So we had a retracement up to this particular level, and it can go all the way up to 20,792. And if it reverses from there, then we are looking at a fall all the way down to 21,800. So that's what we are looking at from an assessment point of view. But we all know that it's not, there's a strong support that is there at the options level at 23,000. So with that into perspective, it's kind of colliding with this particular one. So I think that would be a safer bet to take 22,792. So that will be our plan. We're going to play up to an upside. So let me list down the kind of plan that we are looking at. So that is the plan that we're looking at. Meanwhile, I have another tool in play. So let me just bring that up. This is part of the R tool that's just for further analysis. So the report that we saw earlier was kind of based upon this particular tool itself. What I wanted to bring up here was look at the market consensus. So this is what we're looking at for this week closure, somewhere around 22,500 and 23,000. In terms of the gamma exposure, We are also trying to look at where do we have the market's place. So currently it is at 22,513 is the exposure level that we are looking at. So 22,300 and 22,800. That's the level that we are focusing upon in terms of where the markets are heavily betted. So 22,400 is not going to break, and so that's something that we have to keep in mind. On the downside, that's what we are looking at, and 22,800 on the upside. So that is also the fib retracement level, if you remember. So these two levels are looking kind of strong, and if you want, we can actually look at shorting these options for the week, just so that we can take advantage of those levels. Probably not breaching up, but it's too early to say. I wanted to also see if we can get visibility into, let's say, the end of the month. So I'm just going to switch over and look at the month expiry and see how that is placed. In terms of the month expiry, we are looking at 22,500. Seems to be heavily concentrated. As you can see, this is where we are looking at major option strike prices to be at. So 22,500. In terms of the gamma exposure, the levels that we are looking at is 23,000 and 22,000. So those are the two levels that the market should hold. So looking at, yeah, so this is what we are looking at, 1,000 points gap. So probably good idea to short these two for the month-end closure for the time being, and then you have to adjust it accordingly in case the reversal fails. So that when the reversal fails, it's actually going to come down, but it won't be breaching these two levels. So that's what we're looking at. Okay, so that's pretty much for today, and I think we have got a good idea in terms of how we want to proceed with the trade. Just quickly to recap, so overall market limit that we are seeing is 22,000 to 23,000. And I also want to put the date, that is going to be 7th April 24. Okay, folks, that's it for now. We'll catch up later again in the next one. Thank you.